Trump slapped new tariffs on Chinese goods, the RMB broke the 7 per dollar benchmark, and the U.S. designated China as a currency manipulator. Can the U.S. economy cope with the stress?
They need a 50 basis point reduction in interest rates, lower the interest on reserves, bank reserves, and they have to do it next week.
All Chinese goods are subject to increased tariffs now, but could there be a bigger nightmare looming for China?
And, there's a real danger right now that because so much of China's assets are dollar denominated, that, they are very much at risk of a big free fall in the economy.
And will this trade conflict be solved in the near future?
I would rather have the trade war go on than see Trump retreat in any way.
I would rather have the trade war go on than see Trump retreating anyway. That is Steve Moore, the chief economist of the Heritage Foundation. In the wake of the Fed's lowering interest rate, Trump's new tariffs on China, RMB falling to a historic low, and the U.S. designation of China as a currency manipulator, we need to make sense of the whole sequence of events. How are they interrelated, and why did they happen? What's next for the U.S.-China trade war? How is it going to affect the 2020 election, your investment portfolio, your job security, and more? I'm Simone Gao, and you are watching Zooming In. China devalued its currency as a direct response to Trump's new tariffs. So do you think that's a good move on China's side?
When China does that, when they devalue their currency as a response to the tariff, what effectively that means is the Chinese are bearing the whole cost of the tariff, because it means, let me just give you a very simple example. Let's say China sells a toy to the United States that costs $1. And then all of a sudden the United States slaps a 10% tariff on that toy. So now its cost would go from $1 to $1.10 because of the tariff. If the Chinese in Beijing devalue the currency, so now its price is 90 cents, right? And then the 10% tariff makes the cost to the consumer $1. So in other words, it still costs $1. Who bears the burden of that 10% tariff? Now it's effectively China is paying the cost by reducing their price. So I don't think it's a very smart strategy. Again, these are short-term strategies to try to neutralize the impact of the tariffs, but I don't think it makes sense in the medium and long term for China. China should be more cooperative here. I mean, I think there's a very real sense that the hardliners in Beijing have really taken control of these negotiation processes. And that's frustrating to Donald Trump, to the White House, to the American people, that China isn't making some reasonable concessions to improve the relationship between the U.S. and China. But also, if you look at what's frustrating to me is everything that Donald Trump is asking China to do, to stop stealing intellectual property, to honor our patents, to open up markets to American companies, to stop some of the spying that's going on by China. Those are reasonable things that the United States is asking. And in fact, I would argue if China were to open its markets to the United States, that would be good for China. It would help both countries. So there's a lot of frustration right now on this side of the Atlantic with respect to China not bargaining in good faith right now.
Mm-hmm. So what do you think of this U.S.-China trade war will happen? What will happen to the U.S.-China trade war? The next step. Now it's suspected, the tariffs increase is definitely by Donald Trump himself.
So I think what is going on right now is an escalation on both sides. So Trump got frustrated when China sort of backed away from the previous deal. So then he imposed these new tariffs. China responded by saying, well, we're not going to buy, your agriculture. And so that's an escalation in the tensions. That's the reason the stock market, not just in the United States, but around the world, has really crashed as a result of this. So we all want a resolution to this. I don't think Donald Trump will back down, nor do I think he should. I think he's got the angel on his shoulder on this one. China has clearly been the bad actor, and for 25 or 30 years, they've been able to get away with a kind of more one-sided relationship. But China's now the second largest economy in the world. They're not a developing country now. They've developed, and there are new rules. You've got to play by the rules of the World Trade Organization, and we can't live with China having higher tariffs on us than we impose on them. And so China, I think, will either have to change their ways and make some concessions, or I think China is in real danger here. I think the economy of China could really implode if this trade war continues. It's hurting both countries. Let's be very clear about this. It hurts the United States. It hurts investment in the United States. It hurts shareholders. It hurts workers. But it's also hurting China significantly. And I think the Chinese government is trying to masquerade the impact that these tariffs are having on the Chinese economy. But I would make the prediction that if this doesn't get resolved in the next year, this could drive China into its first recession in 30 years.
What about to America?
Hopefully not, but maybe, maybe. I still think our economy is pretty fundamentally strong with the tax cuts and the deregulations and the, American energy output. But, it's a negative. And, you're seeing right now what's happening is the whole world is jittery right now. And so when you get that kind of nervousness, everybody rushes to buy American dollars because it's a flight to safety. And therefore, you're seeing, interest rates fall. You're seeing the inversion of our yield curve. It's not a healthy situation. So it's almost like a mutually assured destruction scenario if we don't get this trade war resolved. I think Trump would take a decent. He's not asking for the world. I think China's going to have to make some concessions on lowering their tariffs and opening up their markets to U.S. goods and doing something about the intellectual property. But these are not. I don't think he needs major concessions right now. But he does need China to, to change its behavior with respect to trade. We in the United States feel like the trade relationship with China has become abusive, and that's, I think, the view of not just the White House, but most Americans, even the Democrats, who don't like Trump very much here, tend to agree with them that China is a big problem. So there is a consensus opinion in the United States that China is a problem and they have to change their ways.
Do you think President Trump really needs a U.S.-China trade deal for his re-election?
I think he certainly benefit from that. Yeah, he needs this trade deal. China needs the trade deal. Everybody wants the trade deal to happen.
Well, about that, there is a suspicion that China has changed its mind and now it actually doesn't want a trade deal.
Well, if that's if they don't want a trade deal, there's not going to be a trade deal, and the Chinese economy will significantly suffer as a result. Now, they might take the American economy down with them, but China can't.
Do you think that will happen?
Do I think what will happen?
They would be able to take down the U.S. economy with them.
I think Donald Trump has said this well, and I'll say, and I've said it, many times myself. If we can't trade with China, we sneeze. If China can't trade with the United States, they catch pneumonia. And so there's significant more downside risk to China than there is to the United States. However, it is also true that in the United States, we have a very important election coming up in 14 months. And Donald Trump's whole case for being reelected is, look what I've done for our economy. It's doing well. If the trade war drags down the economy, that certainly could hurt Trump's chances of being reelected. And, there's a perception here that the Beijing government would rather have Trump lose and then deal with Joe Biden or someone else who would be more accommodating to China. My own view is this is an important moment in world history. The United States cannot capitulate and cave into China. It cannot. That would be the worst possible outcome. I would rather have the trade war go on than see Trump retreat in any way. China is going to have to make the next move, and they're going to have to make some capitulations and some concessions that should have been made a long time ago. If they do, the United States will make concessions too, but it's a precarious moment for the United States, China, and the whole world economy.
There are some movements in Congress. For example, the Senate might introduce a bill that will put sanctions on major Chinese banks that violated the U.S. sanction laws.
We've seen already sanctions against Huawei, and that has hurt one of China's most profitable and largest companies. I could see that expanding to other companies, including possibly some of the Chinese banks. And there's a real danger right now that because so much of China's assets are dollar denominated, that they are very much at risk of a big free fall in the economy. I don't think the Beijing leaders really understand how vulnerable China has been, because it's been decades. China has grown and grown and grown at a very impressive rate for 25, 30 years straight. It's been a long, long time since the economy has fallen on its knees. So China's playing a dangerous game here too.
What's the likelihood of the Fed lowering the interest rate again?
The Fed has to lower interest rates, and it has to do it immediately. In fact, I just wrote a column saying they need a 50 basis point reduction in interest rates, lower the interest on reserves, bank reserves, and they have to do it next week. They have to have an immediate session, an emergency session, because global markets are in turmoil right now. Commodity prices are falling. We're in a deflation, and the Fed has to cut that off immediately by having an emergency meeting and correct. They should have done 50 basis points at the last meeting. They didn't. That was a mistake, so they should correct that mistake. And I don't think this can wait until September. I think it has to be done right away.
Would this be a reaction to the president's new tariffs and designation of China as a currency manipulator?
It's all interrelated. So, what's happened in the last 10 days or so is the Fed didn't cut rates enough. Then we had the trade war, and what's happened is you've seen, the 10-year Treasury now is at 1.6, I believe, percent. That's the lowest I think it's been in decades and decades. You're seeing an inversion in the yield curve. That's a sign of a very significant fear of deflation. How do you combat deflation? You cut rates, and what has to happen is the Fed has to inject dollar liquidity into the economy, because there's a huge global demand for dollars right now. And if they don't accommodate that global demand for dollars, you're going to get deflation and a huge rise in the value of the dollar, which is, it's a precarious situation. So it's clear what the Fed has to do, and they've got to do it right away.
How did the deflation happen?
How?
Mm-hmm. Why?
Why? Because global demand for dollars. And so when you have a huge demand for dollars, right, but you don't have a corresponding increase in the supply of dollars, what happens to the value of the dollar? It rises. And that's what's happening. So there's not enough dollars circulating in the economy. So the Fed has to flush those dollars into the not just the U.S. economy, the world economy. And the dollar is the world currency, as a way of making sure we don't have an inverted yield curve, and to make sure that we don't have a deflation. Commodity prices have fallen substantially just in the last week or two. Oil prices, corn prices, copper prices. That can't continue, or you could have a real serious recession.
You said the Fed should cut interest rate again next week, and that will be before September 1st. If on September 1st, Trump increases the tariffs to maybe 25%, do you think the Fed should cut interest rate again?
I think the Fed should be watching one thing: what's happening with prices. And look, the Fed can't do anything about tariffs, right? The Fed doesn't have control over tariffs. They only have control of the money supply and the interest rates. And so they should be watching what's happening to the prices, especially commodities, oil, corn, copper, wheat, and those have been falling in price. And that when you have a fall in the commodities index and you have a fall in the interest rates, that is a sure sign of deflation. And the Fed cannot allow that to happen, or it will do severe damage to the economy. So, I don't like this tariff war. I want it to end. But, the Fed doesn't have control over that. All the Fed has control over is how much money is in the economy, and more needs to be poured in immediately.
So would you say if China doesn't want to make a deal, it would be better for the U.S. to keep the tariffs on and the Fed lower the interest rate?
I guess so. It's a tough... I hate to even talk about that scenario, because I want a deal so much. I think we all want a deal. It's good for everyone. It's good for everybody to get a deal, and for China to change its ways. And we're all hoping that happens. China is a big boy now. They're the second largest economy in the world. It's an economy with 1 billion people. They should be buying more American products. We make a lot of good stuff over here. We make good cars. We make good, good. Our agriculture is the best in the world. All of these things. So, that's what international trade is. It's a two-way street, right? And for too long, it's been a one-way street. Yeah. So, I think the Beijing government doesn't look. I don't think that the leaders in Beijing understand how frustrated not just Donald Trump, but American people are with the abusive trade practices of China.
1,000 days have passed since the election, and the president has taken credit for the stock market. But going forward, what do you think are the biggest risks facing the stock market?
Look, there's clearly two big risks right now. One is the Fed makes mistakes, and when the Fed makes mistakes, that hurts the stock market. We saw that happen in late 2008 when the stock market, when the Fed raised rates when they should have been cutting them. So that's number one. And the second one is clearly this China trade war. It's hurting the stock market very significantly. Everyone wants a resolution to this. American businesses, their investment has fallen because there's so much uncertainty about what's going to happen with the China-U.S. relationship. I mean, we're the two largest economies in the world. So, we need a peaceful coexistence and a cooperative coexistence. And so I think those are the two biggest risks. And by the way, if you see a resolution to the trade war, I think you're going to see both the stock market and in the U.S. and China go straight up. I mean, it's so obvious. That's why it's so frustrating. Just get a deal done. It's why shouldn't China buy more of our agricultural products? Why shouldn't China, be more, respectful of our property rights and our intellectual property? I mean, they should. And so I'm worried that that this relationship deteriorates and it will turn into not a Cold War but a hot war where it's just the two countries are at each other's throats, and that's bad for everyone.